Good morning, ladies and gentlemen. Well, we had a very quiet week in everything, really, every asset. And we're likely to have another one as next week we have very little data and we will be waiting for QRA, which has the potential to completely change the investing landscape. If we have a look at 2-year notes, the market is still convinced that the new Fed chair, whenever he's appointed, because I don't think that Powell will be fired. I put very small probabilities on that because I just don't see what they gain by firing Powell, apart from a much lower dollar and a higher price for gold. I really think that is not in their interest at the moment, and there was a very good article in the Wall Street Journal where they expressed what Bessent's argument against firing Powell was, and I completely agree with it. It makes zero sense. Now, I think the 2-year is showing you that the bond market is convinced that they will ease and ease hard in 2026, and that's why the 2-year note just won't get to the levels that I want, which are 4 to 405. And it's more likely that we will actually be trading down in yield in the 2-year note rather than up, or at worst we will be just going up and down, and it will be a dead contract all the way into QRA, and then depending on what the QRA is, probably continue to be a dead contract. The yield curve just keeps on steepening, and even 2s 5s, that's it, 2s 5s, even that is slightly steepening, but really the steepening is evident in things which have duration at the front, like 5s 30s. 2s have almost no duration, so it's not likely that people do 2s 30s. They would probably do 5s 30s, 5s 10s, 10s 30s, and all that just keeps on steepening. We are very, very close to this very important 109 level in 5s 30s. I don't think it goes through there, not before the QRA. And actually, wouldn't it be very interesting if the QRA did some sort of operation twist? Now, what are the possibilities? The possibilities are that, one, they lower coupons. I think that is not a high probability event. Politically, it's going to be a very difficult move to pull off. It's much more likely probably that they vastly expand the buybacks and fund them through bills. Instead of doing 10 billion a month, they could do, 50 billion a month. And basically issue more bills and buy back old securities. This is not what they're supposed to be doing, because when they described buybacks, they said that they would buy back old off-the-run treasuries and issue the same duration. They could change that. They could say, well, that no longer applies. It makes no sense. We will issue bills, lots and lots of bills, and we will then buy back the 20s and 30s off the runs. Something like that. It's a very inefficient way of doing it, or much less efficient than just lowering the coupons, but politically it might be more expedient. So I would definitely not have any more steepeners at these levels, because you're looking to make 4 basis points, and if the QRA is something unexpected, you could lose 20 basis points in a few minutes. So here steepening makes not a lot of sense before the QRA. If we have a look at what 10s 30s are doing, those are sort of indicating that term premium basically keeps on rising. And it's also troubling because you are getting into a situation where it's very, very difficult for Besant to be able to say that he is controlling the long end of the curve. So that is an argument for them doing something at the QRA. I just don't know what they will do, but it increases that slight probability that they will decrease the longest coupons, because it just seems, it seems to me like if they don't do something, we're going down here. And we're going back to where we were for a long time, back into the 80s and early 90s, with term premia high, real rates high, and I'm not really sure how this economy can take it. This much more indebted economy than we had then can take high real rates and high term premium. So I don't know. I just know that if the QRA is not changed, this will just continue in dribs and drabs until we are around the 75 area, and that's another 20 basis points of steepening in the 10s, 30s. I would also like to point out to the investors amongst you the difference that clipping the coupon makes. So this is TLT, which has roughly a 16-year duration, and this is without dividends, and this is with dividends, right? Not a big difference in the chart. You can see that basically even with dividends, the price has gone from, let's call it 150 down to 85. So you have lost a lot of money by buying it any times from 2020 onwards. And then if we have a look at something like VWOB, which has roughly the same duration, but a much higher coupon that you're clipping, you can see that we are actually now breaking at all-time highs. So the coupon difference has recouped all the losses from 2020, and it's going up. So you can see that it makes far more sense, if the QRA is in any way dovish, to actually be long of something like VWOB rather than TLT. Why? Because the dollar will be weak. Or rather, let's say the dollar won't be rising. And if the dollar is not rising, then the emerging market countries, which form part of the VWOB, will be able to repay their dollar debts without any problem. They have problems if the dollar starts going up, because they have to sell the local currency that they make profits in to repay the coupon and the principal eventually in dollars. And this is why it makes perfect sense to keep being long of VWOB rather than TLT. TLT to me is something that you want to avoid, because real rates in the US are still not going down, and that is something that will continue in my view unless the QRA completely changes the landscape. And here you have 30-year reals. You can see how close we are to these highs. The highest, I guess, was around the 275 area, and everybody bought 275. But this is just not the kind of sort of topping pattern that I'd expect. It's likely to start breaking higher, and that's the last thing Besant wants. And that is an argument for doing something in the QRA. If we go to max, you can see that this is as high as it's been since the GFC. I've shown you before charts where the 30-year tips goes slightly further than that. And let's have a look and go expand this, and you can see that yes, we are going back to levels pre-GFC. We are now higher than pre-GFC, and there's very little to think that we won't go to the levels that we were around the 340 area. I mean, I don't see it any higher than that because the economy would just collapse. But it's definitely a possibility, and that's another, nearly 80 basis points that we have here. That is a massive, massive move, and that is why I think this this QRA rather, is so important. If it doesn't change or has absolutely nothing for the market, I think the yield curve keeps on steepening, keeps on steepening, keeps on steepening. It will strengthen the dollar, so it might be slow, but I think it just, it's so difficult to run an economy with real rates around 340. It's in the 30s. It's almost impossible. I've been saying for weeks that Schatz is a dead contract, and I'm only showing it to you because we have the ECB this week, and they will do nothing and go on holiday till September. Completely dead, completely dead. Is the yield curve steepening? Yes, a little bit. 2s, 5s, new lows. You have 2s, 10s, very, very close to this very important level. 2s, 30s keeps on steepening. So something like 5s, 30s keeps on going down, new lows, and we're getting to very, very, very important levels. It's just a steepening is happening all over the world, and that's all that can be said, unless the QRA changes it, because the US QRA changes it will change the dynamics in the Eurozone as well. I don't know how likely it is. I think it's, I would give it no more than a 10 to 20% chance. But if it does happen, we'll be ready. And next week, I'll give you a bunch of trades that are going to cost next to nothing to put on, and we'll pay 20 to 1. But in the meantime, nothing to be done. There's nothing to be gained by going into flatteners because the odds are low. But what I'm basically saying is start getting out of steepeners, because the risk reward here is really not all that great. The dollar got exactly to where I thought it would, 98.81, and then backed off during that brief episode of Powell being fired. But it's holding in very, very well indeed, isn't it? I think that it's definitely bottomed for now, 96.47. I don't think that we will be retrying that next week. In fact, I think it's more likely that we go up to 99.79 very, very slowly, i.e. on the dailies here would be 99.83, but it's almost a nothing kind of thing. I really wouldn't be very short of dollars unless we see those levels. I think it's trading, and the QRA, if they change it, will definitely weaken the dollar because it'll make all spreads at the long end come in. So it's one of those. I would much rather be long of volatility here rather than be short of dollars, if you know what I mean. I would have a straddle on somewhere around this 99.40 level. I would quite like to put on a long straddle, saying that either the dollar is going to make a big move down or it's going to make a big move up. Why do I think that? Because we're getting so close to QRA. And, this level that I've had in there, 155.26, it's exactly where the dollar is bottoming against the euro. I think if we start breaking that, we will probably go to somewhere around here, 112.80, something like that. But in the meantime, I think that we just go sideways. And if the QRA is a complete disappointment, then I think the dollar can probably start strengthening again, simply because I can't see that the spreads are going to be anything but positive for the dollar, i.e. higher long-term yields in the US and relative to the euro, to the euro area. And as those higher long-term rates start biting, then I would have thought it would be very decent for the dollar, and the dollar could come back to this kind of level, and that would be some sort of an ABC correction. If they move the QRA, I think we go straight up to 118.03 and probably even bust it and go to the 119s to the 120s. And it doesn't look like, purely from a technical point of view, it doesn't look like that is very likely to happen. But, what the hell, at these kind of levels, if we see this kind of level, 114.35, I think you're supposed to be longer volatility, because you are going to get a big move either up on the QRA or back down. So that is the way I'm going to play the dollar. I am no longer going to be short of dollars when we get to these levels. I'm going to be long of volatility, because it's going to go one way or the other quite hard. BTC, I think, has shot its bolt for the time being, and it's much more likely over the course of next week to correct down rather than make big moves to the upside. Especially if one looks at something like the weekly or the monthly chart, we are, bumping up against the top Bollinger Bands, and especially at the monthly, we went through it like he likes to do and then come back. So I don't think that anything much is going to happen in BTC land. I think it's going to correct. And the one that's interesting to me is MSTR against 1.5 times IBIT. Why 1.5 times? It's because MSTR is slightly leveraged, so that is comparing apples to apples. As you can see, on Friday it came down hard, but we are very close to the 200-day moving average, and you can see every time we got close to the 200-day moving average, there was a nasty bounce. Now, how does the bounce happen? Well, either MSTR goes up by 5% or IBIT comes down by 5% while MSTR does nothing, or some combination of the two. I think it's more likely that MSTR rallies, but what I would say is that this is a great opportunity on Monday, if we open slightly weaker in MSTR and nothing much in IBIT, is to actually go long of MSTR. I think we will definitely trade these kinds of levels, but that's 3% or something like that you can make on your money, and that's not to be sniffed at. It's very, very unlikely that this starts breaking down hard now. It's much, much more likely that we bounce. Now, what happens if the QRA changes things? Well, I think that the move into Bitcoin is going to be quite ferocious. I don't know what happens to this spread, but that's not important. But BTC, I think, will definitely retest the highs, and you want to be definitely long of BTC if next week you get some kind of a correction in this area. You want to be long of it for QRA, You never know. If nothing happens, you just sell them out. I doubt that the people who trade crypto are going to be so knowledgeable that they're immediately going to take down the price when they see the QRA at 830. In fact, I don't even think they know what a QRA is. GSG is really trading technically quite perfectly. It's just sort of bouncing around. This is some sort of an ABC, who the hell knows. And to me, if after the GFC we're above 22.93, I'm buying 3 kinds of shit out of this. I think it's going to go much, much higher. When you think about it, if you want to run an economy hot, what do? You lower duration issuance and you immediately revalue stocks, and that has a wealth effect. And therefore you're running the economy hot. You need a lot of oil, you need a lot of commodities in general, and commodity prices, after being in a range for 3 years, should start breaking higher. That's the only thing that makes sense to me. So I would definitely buy a lot of GSG if the QRA changes. The ratio between gold and GSG is remaining pretty constant, but it's getting quite close to the 200 MA, which is rising nicely. So what do I think about gold? Well, it done nothing last week, absolutely zero. This was the little brief spike on the Powell, firing news, came straight back and keeps on closing below this 33.50 level. And that to me says that we are probably going to have a little bit of a weaker session next week at some stage. But the fact that I love GSG if they change the QRA, and that gold GSG is coming into support, means that gold will probably rally just as much as GSG if they change the QRA. I will be a big buyer of calls and call spreads if we get down to here, because it just sort of gives me the edge. If they change the QRA, we're going straight up. We're breaking this wedge formation straight higher. Let's start with NQ. And this is the monthly chart, and we are getting very, very close to the monthly Bollinger. As you can see, and I can enlarge this for you, it's very rare indeed that it goes through the monthly Bollinger, and when it does, it comes back. So I'm not saying that you have to be short of it up here. I'm just saying that the risk reward is to actually get out of the long tech trades, like I've had long QQQ, short DJI, long QQQ, short SPX, or short the small caps. It's getting to a level that the risk reward says doesn't make a lot of sense. Now, could it do something like this? Yes, but then the month after it comes back. So you're always going to have an opportunity to get back in. And it just doesn't make a lot of sense ahead of tech earnings. With these technicals, I would much rather be flat. And also what it says to me is that, because this should scream on a QRA, okay? It should absolutely scream higher. And, that tells you that the odds aren't all that high. That's all it's saying to me. But if you have a look at ES, that has quite a bit more to go. 64.30, 64.40 is where the monthlies are. And that's why I'm saying that those charts that I showed you belong of tech against other markets like the SPX or the Dow Jones, at this level doesn't make all that much sense to me. Not ahead of the earnings. The big tech earnings start next week. and continue, especially the week after, just like the QRA, it just doesn't make a lot of sense to me. Just like it doesn't make a lot of sense to me to be exceedingly long of equities here. SPX, as you can see, we keep on trading within the Bollinger Bands. But the other thing that is absolutely clear is that unless we start breaking the 62 level that we made these lows at and 61.44, this is all trading. Below 61.44, it becomes a fundamental move. Until there, it's just trading up and down and nothing. But I must say that all these equity charts are not really suggesting that the QRA is going to be a big factor. But you never know. There's no real point in doing in-depth technical analysis on things that could change fundamentally by next Wednesday. So I'm not going to waste my time or your time doing any more. I'm just giving you a brief, how shall I put it, taster of what could happen next week ahead of the QRA, and I will write extensively what I think the change in asset prices will be on different scenarios of QRA next week, so you'll be ready in any case. I really don't think anything much happens. I think that if gold comes off, you want to be buying call spreads. And I think if GSG comes off, you want to be buying call spreads in that or going outright long, because I think the likelihood of GSG going down is not great. Otherwise, I am definitely getting out of all my NDX spreads. So I will no longer be long of tech by the open on Monday. And I think that has probably run its course for the time being. And even if it hasn't, as I showed you, you will have another opportunity, another bite at that apple up at some stage. It always comes back. I do still like EEM, and I don't know why I like it, because I'm not as positive on the weakening dollar story as I was only last week. So I think that we will get to the higher levels at some stage, and there you want to do volatility spreads, i.e. you want to be long of straddles rather than anything else, because I think the moves in the dollar one way or the other are going to be quite violent post QRA. But I will write all that up for you, and you will have the precise levels that I think all asset prices are going to go to if they change the QRA. If they don't, I think it's more of the same, more steepening, higher yields, real yields, and eventually that has to be very, very bad for equities, but not in the short term. Thank you very much indeed, and tweet you tomorrow.